The sustained devaluation of the lira and the economic repercussions of Russia's invasion of Ukraine have contributed to the acceleration of inflation in Turkey. The confrontation between Russia and Ukraine has also worsened the situation, contributing to the recent spike in energy costs. Hello there guys, welcome back to the channel and greetings. Today's video will discuss inflation in Turkey, so be sure to stay focused. In May, Turkey's annual inflation rate surged to a 24-year high of 73.5%. Spurred by the war in Ukraine, rising energy prices, and the falling lira. However, the figure was significantly lower than economists had expected, so the situation was not entirely catastrophic. According to the report, month-over-month inflation in consumer prices reached 4.95% in June. The transportation industry experienced an annual price increase of 123.37% more than average. According to the official figures, the price of food and drinks that do not include alcohol climbed by 93.93%, while the costs of furnishings and other domestic equipment increased by 81.14%. In June, the Domestic Producer Price Index experienced a month-over-month increase of 6.77%, with an annual increase of 138.31%. In May, Turkey's annual inflation rate was measured at 73.5%. The most recent statistic is higher than the 73.5% level reached in 2002, and is the highest level seen in Turkey since October 1998, when annual inflation was at 76.6%. Turkey was fighting to end a decade of persistently high inflation. Despite this, most analysts anticipated that the annual inflation rate would climb to 76.55%. The cost of transportation has increased by 108% over the past year, while the cost of food has increased by 92%. These increases signal a worsening economic crisis for Turks, who already have trouble affording essential items. In May, the Domestic Producer Price Index experienced a month-over-month increase of 8.76%, which resulted in an annual increase of 132.16%. Since the COVID-19 pandemic, the value of the Turkish lira has been decreasing, which has led to the country's current financial troubles, which have not been witnessed in decades. Over 40% of the value of the lira was wiped off in 2021 because the central bank cut its policy rate by 500 basis points, from 19 to 14%, between September and December, despite the high inflation rate. Since that time, the bank's interest rate has remained unchanged. The Turkish lira fell against the dollar by 0.25% to 16.5050, reaching its worst level versus the dollar since December. In 2021, the value of the local currency fell by 44%, and it has fallen by another 20% so far this year. After suffering a severe drop in value in 2021, the lira has continued on its downward trajectory and shed almost 20% of its worth compared to the US dollar in the most recent 6 months. Even though inflation is rising, Turkish President Recep Tayyip Erdogan supports maintaining low interest rates because he believes this will make it easier for investors to make financial commitments. Economists have forecast that Turkey will most certainly continue to have significant inflation during the entirety of 2022. Finance Minister Nureddin Nebati noted on Twitter that monthly inflation readings are heading lower, which is a positive sign, even though the yearly rate is at its highest since Erdogan has been in power for the past 2 decades. In the past, Nebati has stated that inflation will drop to single digits in time for the election that will take place the following year, due to an economic program that prioritizes low interest rates, robust output, exports, and a current account surplus. However, during May, the trade deficit ballooned to $10.7 billion, representing a year-over-year increase of 157%. This was mostly attributable to the importation of energy. By the end of 2024, the central bank anticipates that inflation will be in the single digits. According to a median forecast, inflation is expected to remain elevated for the remainder of 2022 and finish the year at 63%. This is an increase from 52% in the survey taken 1 month ago. It is not possible for Turkey, which has gone beyond the rules of economic doctrine, to solve its fundamental problem of high inflation with its current policies, according to economist Arda Tunca, a columnist at Politik.yol. It is not possible for Turkey to solve its key problem of high inflation with its current policies. Credibility of the data. The credibility of TÜİK's data has been called into question by opposition MPs and economists. However, TÜİK has denied these concerns. According to polls, most Turks believe that inflation is significantly higher than the official data indicates. To everyone's surprise, TUIK announced that it would no longer be releasing the average prices of the individual products that made up the inflation basket. Since 2003, these prices have been displayed in a monthly updated table. As a component of its compliance with Eurostat, the Institute has indicated that it will publish an index table displaying changes in item groupings. Establishing TUIK's structure independent from the government is as vital as the central bank's independence, wrote Mafi Egelmez, another Turkey-based economist, on Twitter. Establishing TUIK's structure independent from the government is as important as the independence of the central bank. The development of accurate and trustworthy data is the most important and fundamental requirement for putting in place the appropriate policies. The most significant increase in cost was seen in transportation. According to the most recent findings from the Turkish Statistical Institute, the annual inflation rate for consumers in Turkey reached 79.6% in July, the highest level in the past 24 years, while the monthly inflation rate was at 2.37%. According to the findings, the cost of transportation was one of the four primary product groups whose prices rose at a greater rate than the Consumer Price Index. The cost of transport increased by 119.1%. In addition to food and non-alcoholic beverages, which saw their inflation rate increase by 94.65%, furniture and domestic equipment, and alcoholic beverages and cigarettes are the three other product groupings whose inflation rate climbed faster than 79.6%. The Transportation Services Index reveals that even though the transportation group had the most significant monthly increase, it was also the only leading group to record a negative monthly increase of approximately 0.85%. This is even though the transportation group was noted as the group with the most significant monthly increase. On the other side, the health group experienced the biggest monthly gain, which was 6.98%, closely followed by the alcoholic drinks and tobacco group, which experienced an increase of 6.85%. In 2022, there was a noticeable acceleration in the rate of price increases. Even though Turkey's inflation rate has been moving in an increasingly upward direction since 2021, the pace at which prices have increased has quickened beginning in January 2022. This is supported by the most recent statistics from TSI, which indicate that the cost of goods and services has climbed by an average of 45.72% since December 2021. Prices had risen by 10.41% at the same time the year before and 6.37% the year before that. Erdogan stated the previous week that he anticipated inflation would decline to acceptable levels between February and March of the following year. The central bank predicted that inflation would fall to 42.8% in 2022, even though it maintained the benchmark interest rate at 14% throughout the increase. According to Witold Barki, a senior macro strategist at Nordea Asset Management based in Denmark, Turkey was in a league of its own among emerging markets when it came to inflation due to what he said was its lack of credible policy response. He said this was because Turkey did not have a reasonable policy response. Inflation is a general issue for EM, and in Turkey, you end up with a toxic mix as we have also a policy issue, Barki said, adding that he anticipated further weakening of the lira. Inflation is a general issue for EM, Barki said. In Turkey, you end up with a toxic mix as we also have a policy issue. Legislators and economists affiliated with the opposition have cast doubt on the dependability of the data provided by TUIK, an accusation that TUIK has refuted. According to polls, Turks believe that inflation is significantly higher than the official data implies. A survey on inflation conducted the week before showed that respondents anticipate inflation to fall to about 70% by the end of 2022. That's all we have for you today. Take a look at how Turkey can take measures to overcome inflation. If you enjoyed this video, give it a thumbs up. If you don't want to miss any future videos, subscribe to the channel and switch on notifications.